Hi there, it's Friday the 11th of April 2014 and welcome to the roundup of my weekly trading on trendfollower.co.uk. So I'm going to start with today's deals, and the first deal I did was to make a buy of the ETFS aluminium, and you can see that aluminium has been dropping in price for some considerable time, and now it's on the up again. I think that this mark down here represents a significant low, and whilst the SMA hasn't been breached, the 30 SMA has been crossed, and I'm hoping that we'll see a rise in aluminium. Industrial metals in general seem to be doing well in the past few weeks, so I'm taking a punt on this, and I've opened a buy position in aluminium, and you can see that my stop is down here somewhere, and well, we'll see how it goes. So ETFS aluminium is one of my two new open positions. And the other position that I've opened is a sell trade. I've opened, or I've sold to open a short position in the Nikkei 225, which is the Japanese equivalent of the FTSE 100. And if I open the graph out, you can see it's been a real old roller coaster ride for the Nikkei, but since the end of 2012, the Nikkei has gone absolutely bonkers. Risen phenomenally, and you can see how the price has risen here. But if I shorten the graph, you can see that really since this time last year, actually, the Nikkei has sort of just been moving around up and down, going sideways, in spite of the Japanese best efforts to devalue the currency and make their country more competitive. So really this week it's dropped significantly down through the 50 SMA, and markets really have been pretty poor this week, as we'll talk about later, and so I decided to short the Nikkei, and my stop's going to be up here, and we'll see how the Nikkei does over the next few weeks and months, and follow it down and see how that goes. So two positions opened this week. One was a buy in aluminium, and the other was a sell, a short trade of the Nikkei index. So not a share, but an index. So hopefully these two will not correlate, and what I'm trying to do is to get away from a situation where I have lots and lots of positions that are on one side of the market. In other words, lots of buy positions in case the market goes against me, and also not to have too many things all in the same type of basket. So I think it's good to have a mixture of shares and commodities, currencies, so that if things go one way in the markets, that my positions aren't all affected in exactly the same way. So I've had a couple of positions, actually three positions, have closed this week. The first one is Global X Uranium, and you can see that I bought it here when it ran up through its 50 SMA very nicely, was looking really good, and did quite well the following week, but since then has dropped away, and the price this week fell down through the stop, which was here, and so the position has been closed. So I'm out of that trade at a loss, of course, so that's a pain. And Equinix did something similar. You can see where the buy was triggered here as the weekly candle moved up through the SMA in the week of the middle of February, and pretty much since then it's just fallen backwards, and this week the trade closed out, and again that was a losing trade. Granger has also closed out this time. This is a profitable close. I opened this trade when the parabolic stop and reverse swapped over. If we look at the graph for Granger, you can see that since, well, 2011, 2012, Granger was very nicely on the up, and I got in at this point here when we'd had a little bit of a setback, and then it started to take off again, and the price started to rise. Again, my attention was drawn to it by the reversal of the parabolic stop and reverse. So what's happened is that the price has risen, and the stop has been ratcheted up following it, but on Friday afternoon, this afternoon, the price dropped and the stop was triggered, and that was the end of the trade. But it made a profit. It made me £90, so that's okay. Fair enough. That's the way it goes. So I'll talk you through how the other positions are performing in the portfolio. Coffee's done extremely well this week, and you can see on the graph here how it gapped up, shot up here, and it's very nicely in profit at the moment. So the stop is down here now, so we'll just see how it goes. Opening up the graph, you can see how coffee has gone down and down and down, and then nicely up, and this was the scary ride here. Obviously, if we can get this sort of rise, we want to track with it, so we don't want too close to stop. So we'll see how it goes. So that's coffee. My position of last week, the ETF of Brazil has done okay. It went up nicely, went through the SMAs, come back down again a little bit, but that's fine. There's lots of breathing room here, so we'll see how that goes. Anglo American, one of my miners, is just hovering around here, not doing very much, but again, it's coming from a low, and I'm keen to keep this position open really if I can, and that went up and was in profit, and came back down a little bit, but again, just no great news on that trade. International Tower Hill Mines was a position that closed, and then I reopened last week, and I'm using the 30 SMA as my stop here. So again, I'm keen to keep this trade open because it could be a real beaut, but hopefully it won't drop down. Let's see how that goes. CenturyLink, which is a US high-speed internet provider, has not done much this week, so I think that trade is down very slightly, but again, lots of breathing room, which is how I like it. My currency trade opened last week was the Aussie dollar against the US dollar, and that's done very well this week, so nicely in profit. This was the candle that stimulated the buy, and you can see how it's moved up during the week. If I extend the graph out, you can see how it's risen, stayed fairly static, and then dropped, and I'm hoping it's going to rise from here, so that one's doing really well. Quite a disappointment has been utility-wise, which last week had done so well, only to reverse this week and drop back down again. It's still nicely in profit, but it's not in profit to the degree that it was, which is a shame, but my stop's down here, so again we've got room, and I'm hoping that over the next few months that will regain its profit and go up again. So that's the way the cookie crumbles, but it's still a profitable trade so far. Now, this isn't one of my trades, this is just a graph of the FTSE 100, just to show you how the market has really been just moving up and down gently, and really sort of been rather difficult markets trade. You haven't been able to trade it really, because when you think it's going up, it then goes down again, and it's really not been going anywhere. In fact, if you look at the space between the 30 SMA, this blue line here, and the green line, which is the 50 SMA, it's becoming gradually smaller, and there's really the market is fairly directionless, which makes trading pretty difficult. So last week things moved up, and a lot of my open positions did well. This week things went down and up again, and it's been a real roller coaster ride. So it's kind of interesting to look at the markets like this, and by looking at an index, you can get a feel for how the markets are doing. They say a rising tide floats all boats, and that's true. If you've got long positions open, if the index goes up, you're probably going to do okay. Now, at the moment, just looking at the graph, you can see the roller coaster, but shortening the graph, you can see how at the moment really the index isn't going anywhere. So if you've got long positions open, they're probably not going to go very far at the moment.